a lot of LNG to the markets in the next few years from US, from Canada, from Qatar, from Australia. Given the bitter experience Europeans had with Russia, given the very fact that there will be a lot of LNG anyways coming to markets, and the gas markets turning from the markets of sellers to buyers, I think to look Russia as an alternative option for getting gas will be economically and, in my view, politically wrong. The second question from Eva about our stocks, the stock release. So I should first tell you that today there is a plenty of oil in the market. I repeat, there is a plenty of oil in the market. Our problem is a problem of dislocation. It's a problem of logistics, and this is a serious problem. And it is creating challenges for many countries, and for some countries more than the others. And I know that the several governments are trying to address this serious challenge. In the last few days, I was on the phone with the ministers, many ministers from producing countries, such as the United States, Brazil, Saudi Arabia, Azerbaijan, Norway, Canada, to give you a few examples, but as well as some consuming, importing countries. European Commission today, I am with Madam President and Commissioner Dan Jorgensen, but with UK, with Turkey, Singapore, India, Minister Puri of India, Japan, Korea. There is a lot of effort going on in order to solve this problem, and everybody is trying to find a solution. Now, as far as the stocks, IEA stocks are concerned, I can tell you that based on my discussion with the IEA member governments and looking at the current market conditions, I can tell you that all options are on the table. But there are no plans for a collective action at this stage. We are facing a temporary disruption, a logistical disruption. I said, and I repeat, there are no plans for a collective action at this stage. But different countries have different domestic contexts and different domestic options. I have, last Tuesday, I have convened an extraordinary governing board meeting in Paris to discuss the current market conditions and to have an initial assessment of the energy impact of the ongoing war in Middle East. We will continue to follow this issue and being active there. The third question from the what to do to lower electricity price, or what kind of options Europe has to meet the electricity demand growth. Of course, Europe will still import for its electricity generation natural gas years to come. But I believe it is in the European countries' interest for their energy security and for the sovereignty of the European countries to make more of their renewable energies, solar, wind, and others, and making a strong comeback for the nuclear power. This is something that after the Russia's invasion of Ukraine, it get an important boost, and I hope that we will see a continuation of this trend. Both renewables and the nuclear power should be the pillars of the European electric system, and again we will definitely use gas as well.
Let's see, Ian, please.
Thank you very much. Ian Johnson from the Financial Times. Oil is about $80 per barrel at the moment. Do you think that's a reflection of short-term tensions in the Middle East, expecting this to subside? Or do you think that's an accurate reflection of the way in which the conflict is going in oil markets? And just a second question, if I may, on stocks in Europe of gas dropped to 30%, and in some cases much lower in certain countries. Do you think that Europe has sufficient stocks as we come out of the region?
Okay.
Argus, please.
David Gabriel from Argus. Two questions. One on...
Everybody did two questions in Brussels. It is not like Paris. Yes.
If required, what does that mean in terms of releasing stocks? And then secondly, reflectively, do you think the US President Donald Trump sufficiently considered the effect on oil supply from his actions?
And one, please, only one from the Times.
Gina Smiley from the New York Times. Thanks for taking my questions. Simply, are you worried that this could become a crisis like 2022? And if it does, is Europe prepared for it?
Okay. Okay. One more and I finish. Yeah, I have to really go. Yeah.
Sama bin Javed, Al Jazeera English. So I've just come from a suppliers meeting from the LNG suppliers, and they say, well, if the wind doesn't blow and the sun doesn't shine, LNG is still going to be there, not just as a transition fuel,
Yeah.
but also because of the increasing demand that you've mentioned in your report as well. So how difficult do you think this situation can become? Because you said this is a small bump in the road because it's a logistical crisis right now. But if this carries on, what risks do you foresee for Europe specifically? And do you feel, coming back to my colleague's question, like 2022, Europe sleepwalking into another crisis?
Okay. So I start with maybe with FD with Ian. Ian, welcome to Brussels, by the way, leaving Paris to coming to Brussels here. So oil is $80. I think this is mainly, I would attribute this to the current crisis we have, because when I look at the market today, as I said, there is a plenty of oil. We have no oil shortage. And when I look at the demand, which is the other driver of the price, demand is about 800,000 barrels per day, and there is a huge surplus in the market. So I want to say, once again, all of us to understand, there is no shortage of oil globally. The issue is the dislocation, and this is the reason we have this price increase recently. Now, for gas, in fact, gas is another story than oil, because for gas, the bulk of the gas going from Middle East is destined for Asia. And the implication for Europe would be, if the crisis continues this way, the Asian buyers and the European buyers will need to compete for the LNG, which will get scarce and scarce. So this will be the challenge for European countries if the crisis continue in the next days or weeks to come. The question from our colleague from Argus, what does it mean if required, based on our the regulations? We need to our governments to agree for a stock release and to decide that this market conditions justifies a stock release. But once again, at this stage, we are not there. There is no, at this stage, any plans for a collective action at this stage we speak. Now, with the question about the U.S. president, this is a issue that I focus more on the energy issues, which brings me to the question on the last question on the LNG. And our colleague from Al Jazeera coming from the LNG producers meeting. As I said, dear colleagues, there will be, we expect in the next 5 years, a huge amount of LNG wave, about 300 BCM of new LNG coming. Just think about this. The LNG industry is a industry for 3-4 decades. What this industry has built in the last 3-4 decades, the half of it will hit the markets in the next 5 years. This would mean that there will be a lot of LNG. This would mean there will be a downward pressure for the prices, and most importantly, 75% of this LNG will be flexible. So I believe this would open the doors for the US LNG, Canadian LNG, Qatari LNG, and Australian LNG to be a part of the energy mix in Europe, of course, in Asia and the rest of the world. Of course, we will look at these LNG markets much more clearly after this crisis is over, but the projects are going on, and there will be plenty of LNG coming to the markets.
That's all we have time for today. Thank you all for coming. And if you have any follow-up queries, please contact the press office at the IEA. Thanks a lot.
Thank you. Bye-bye. Thank you.
Thank you.
Thank you.